Good morning or good afternoon to all of you who have joined us for this webinar. Uh, it's great that you've joined cannabis banking. For those of you who have been following it all, know that this is an evolving landscape. There's not a lot of written guidance about cannabis banking. This webinar really is for community banks and in particular lenders at community banks, BSA folks, compliance folks, chief risk officers, and anyone who's part of the C-suite at your financial institution. And it's great, it's so important that you've joined and that we have this discussion about cannabis banking. So again, thank you for joining us. Just a couple of housekeeping details. Ted and I plan to talk about cannabis banking and in particular cannabis lending for about 45 minutes. And we're going to leave about 15 minutes for Q&A. Please feel free to put your Q&A. I think there's a place for you to put your questions in the chat or the Q&A. So please feel free to do that. And with that, I think we'll get started. I'm going to start just by introducing myself. I'm a former financial regulator. I was the attorney for the Maine Bureau of Financial Institutions for about 7 years. Following that, I worked at a financial institution for close to 10 years, at which I built a cannabis banking program, which turned out to be highly profitable. And we were one of the first to develop that. For the last 2.5 years, I've been at Cogent Law, and the majority of my practice is actually consulting with community banks on one of four things: how to start a cannabis banking program compliantly and profitably, how to get into lending in particular, which is going to be the focus of Ted's and my conversation today. I have helped several remediate their programs. They've gotten into a little bit of trouble with the regulators. And then I've also worked with some that have pretty well developed programs, but they've kind of gotten bogged down with some inefficiencies, and they wanted some advice on how to make their programs more efficient and more cost effective, but at the same time staying on the right side of the line with their regulators. So that's kind of the chief thing that I do at Cogent Law. Just a word or two about Cogent Law, and then Ted, I'm going to hand it off to you. The reason I joined Cogent Law, I used to be in private practice, and I promised my wife I would never get back, I would never jump back into prison. But Cogent Law has a very unique model. There are no billing quotas. The attorneys at Cogent Law are all top tier attorneys who are focused exclusively on their clients. Our managing partner developed a very unique model whereby all of the chaff was kind of taken away, and we focus primarily on exclusively on our clients. Our rates are much less than at other full service law firms because of that. And I am the master of my own destiny. I do a lot of my work on a fixed fee basis, and my billing rate is dependent on the client that I serve. So I just wanted to say a few things about Cogent Law. Ted, I'm going to hand it off to you to tell folks a little bit about your background, CTrust, and what distinguishes CTrust from your competitors.
Great, great. Thank you, Chris. And thank you to Cogent Law for hosting this. We really appreciate the opportunity to be part of this webinar today. My name is Ted Robinson. I am the head of business development for CTrust. I am also one of the co-founders of the firm. Just very briefly about my background, I had a long career in lending and technology related to lending in the community bank and credit union space, followed by a stint as a chief operating officer of a mid-sized MSO. So I kind of combine the institutional knowledge of banking with the craziness of cannabis, if you will. A little bit about CTrust. CTrust is a business intelligence platform that provides credit risk intelligence on the cannabis industry. So institutional debt buyers and financial institutions can rate, analyze, and price risk. We deliver credit ratings, um, lending decision analytics, and portfolio analysis for our clients. Chris, I'm going to throw it back to you.
Yeah, Ted, thanks so much for that. And Ted and I, we've presented before, and I have worked pretty closely with CTrust on a number of things. And we're going to get into, some of the additional risks associated with cannabis lending. And I can tell you that CTrust, I know their platform pretty well, and it does tick those boxes. But we'll get into that in a
Uh,
little bit.
Chris, we ought to give him a little personal note too. Both Chris and I live in New England. He's in Maine and I'm in Vermont. But coincidentally, we both grew up in the Buffalo, New York area, and we are still Buffalo Bills fans today. So we have a lot of shared kindred between the cannabis industry and our heritage growing up.
Yeah, thanks for that, Ted. Yeah, very um, uh, great thoughts about the Buffalo Bills when I was growing up. So yeah, we Ted and I definitely share that in common. Ted, I want to talk a little bit about, what the current cannabis banking landscape is like. I know that back in the days when I was the general counsel and running the cannabis banking program at our financial institution, we had it very easy. We were kind of the only game in town. We didn't, there wasn't really much competition in the market, so we kind of were able to call our tune on fees. Our board of directors, we went back and forth on lending. We never quite got there. Our CEO, I think to his credit, wanted unanimity on that issue because it is an important decision to make. So we never quite got there, but it's a little bit different now, Ted, and maybe you want to talk a little bit about that?
Oh yeah, definitely the cannabis lending landscape is this cannabis banking landscape is definitely changing. The days of high fees and low competition are long gone. Fees have now, like the price of cannabis, have somewhat collapsed in most markets. And the expense, the compliance expense of running a cannabis banking program is fairly significant. And with decreasing fees and increasing expenses, there's a lot of banks starting to look toward lending to really add to their net interest margin and make this a profit center and not a cost center within the financial institution.
Yeah, that's exactly right. There is competition now, particularly on the depository side. Make no mistake, there is still a very small percentage of financial institutions that are in the cannabis banking space, but there are enough of them now that cannabis operators are now bank shopping. And, anecdotally, I can tell you back when I was at my financial institution, I was getting calls 2 or 3 times a week from our cannabis operators begging for financing. And we never quite got there. We were on the verge of their getting to cannabis lending, I think, when I left. But cannabis lending really is the easiest way now for financial institutions to distinguish themselves from their competitors. Within that small minority of banks that are cannabis banking, there is an extremely small minority of banks that are offering commercial lending. And so that's, again, and the other thing I want to say about, cannabis banking from a regulatory perspective, one of the things the regulators are very concerned with is that your cannabis banking program uh, is uh, is able to is self-funding. In other words, that it's financially sustainable. And with that downward pressure on the depository pricing that Ted was just talking about, there there in order to remain financially sustainable, another very easy way to do to be not only become financially sustainable, but also to become make your financial banking program a profit center is by introducing cannabis lending. So, from a regulatory perspective, again, there's no question that you are taking on additional risk when it comes to cannabis lending, but in a funny kind of way, there are certain ways in which by taking on cannabis lending, you are mitigating some other risks, and I'll talk about that maybe a little bit later in this presentation. So, let's again talk about cannabis banking from a regulatory perspective. Let's continue that conversation a little bit.
Well,
Yeah.
Chris, certainly today, with I think there are somewhere between 850 and 900 financial institutions in the U.S. today that are filing SARs on a regular basis. That's the suspicious activity report, which goes hand in hand with cannabis banking. So it's a pretty good proxy. What we're seeing is several of our recent customer wins have been with financial institutions that are entering the space through lending and bringing deposits with it. So they see the opportunity not to just to go fight the field battle for the deposits, but to go out and find viable lending candidates within their footprint, and then as part of the covenants within those loans, bring those deposits on board. So I think there's, a market shift dynamic that's happening with some of the recent entrants in the space.
That's exactly right, Ted. Yeah, thanks for adding that. And, cannabis banking generally, again, from a regulatory perspective, the chief risks, again, that by far and away the largest circle of risk with cannabis banking, not just the lending with banking, is the compliance slash BSA risk and, possibly getting a downgrade on your BSA rating. There are some other risks. There's the reputational risk, which I think is minimal now, and particularly now with the rescheduling. We're talking about a drug that is going to, or a substance, I'm sorry, that's going to be classified in the same category as Tylenol, that's coated with codeine. So I think that risk is minimal. There are some legal risks associated with cannabis banking too. There are arguments on the books about aiding and abetting in the commission of a criminal offense. The prosecutors are very, very well aware of the very persuasive reasons can, for banking cannabis, and not least of which is the fact that you're safely vaulting all of this cash, which would otherwise be on the street. So, in my view, there's no we certainly have not seen any prosecutorial appetite for going after a bank or credit union banking cannabis or lending to cannabis. And history is on our side. Banks have been doing this now for 12, 13 years, and not one of them has faced any kind of prosecution. So again, that legal risk, that circle of legal risk, I think is extremely small. As an attorney, I can't tell you you're not going to be prosecuted, but I can tell you that the risk, in my view, is extremely small, and history is on my side. So I just wanted to make that point too. Getting into the cannabis lending side, CTrust is the one that really, the additional risks associated with cannabis lending versus cannabis deposits is really on the legal and the underwriting risk. And CTrust is the one partner that obviates those risks. And Ted, why don't you talk a little bit more about
Yeah,
that?
thanks, Chris. Well, certainly, there are risks involved with cannabis lending. First and foremost, you have the credit risk. You have also the risk of collateral. And you have the risk of putting uniformity into your program and have a defensible loan package when an examiner comes in and looks at the loans that are associated with cannabis cash flows. I think the kind of the underlying and hidden fact about random audits in cannabis is 100% of your cannabis loans end up in the random audit. So if you're making loans in the cannabis space, you better be prepared and have a file prepared that has the that has a defensible underwriting and a consistent underwriting and a consistent way you price that risk across multiple clients, and then have a really good feel for what the underlying collateral is and be able to defend that collateral. Because when that collateral arrives at the bank, let's think about it. It really is at its best use and not its expected use, because it could be built out for cultivation and have massive HVAC and lighting systems inside of what is just traditional warehouse space. So being able to understand kind of the value of that collateral if things go wrong and be able to have a defensible path against that, I think is very important.
Absolutely. And then in addition to that, there are additional contractual and legal risks that banks are going to have to want to take into account. I've helped several financial institutions draft uh, cannabis specific side agreements. I'm a big proponent of having a side agreement rather than having provisions built into your standard loan documents, not mainly because they're going to read the side agreement as opposed to your loan agreement. They don't always look as closely to all of those provisions, but you're going to want a bad boy provision in there to be able to call the loan. You're going to want a provision in there in the event that the regulatory landscape changes and you're going to have to get out of cannabis banking. Again, I think the risk of that is minimal, but you're going to want that in your agreement. Uh, and getting back to what I was saying before about how there are certain ways that cannabis lending can actually obviate some of the risks, you're going to want a provision in there that I have included in all of my side agreements that, if you're going to be a borrower for this financial institution, you're going to use that financial institution as your primary depository institution. So it's a way of keeping your cannabis deposits, which is very, very important from a regulatory as well as from a safety and soundness perspective. You're also going to want provisions in your side agreements that incentivize your cannabis operator to remain compliant both with your state cannabis regulator and also with your own banking cannabis program. There are ways in which cannabis lending can actually mitigate certain of the risks associated with cannabis banking. Again, don't on balance, you're taking on more risk, but I think too few financial institutions take into account the fact that by offering cannabis lending, you can mitigate certain risks associated with your program.
Well, Chris, you're totally right, and cannabis, cannabis the documents or the docs in cannabis are definitely covenant heavy, and having the bad boy carve outs, the side letters, and a standardized set of docs is only going to enhance your experience when the examiner shows up. I think that's way, and I think it's we talk to our banking customers about the importance of, even though it is not here today, but the evolving secondary market that is going to be here for cannabis debt, and to originate with the idea of selling that loan in the future. So price it right for the risk, leave margin in there so it can trade on the secondary market, and consistency of documents, consistency of collateral analysis, and having a plan if something goes wrong. Because as a bank, you probably don't want an operated dispensary or a cultivation facility, but there are plenty of firms out there in the industry that will provide this specialized servicing in the event that something does go wrong with a loan.
Yeah, Ted, your talk about consistency is so, so important. And, getting back to the examiners, they're going to want to see that consistency in your policies and procedures. So, you're going to want to make sure that your policies and procedures spell out, who you're lending to, what are the criteria for a cannabis depository customer becoming a borrower? What are the lines of authority regarding your cannabis loans? Also, board awareness is very, very important from an examiner perspective. You're going to want to make sure that your board is fully aware of, what cannabis loans are out there. There's been some talk about getting board approval on for cannabis loans. There's no requirement for that. I personally think that's a little bit cumbersome, but again, your board is going to want to make sure your regulators are going to want to make sure that your cannabis loans are in your board package. Yeah, go
Chris, I
ahead.
want to add one thing to that. I think the other piece that I think regulators are very interesting is surveillance once the debt has been placed. And having a regular program to surveil these loans, to understand and to get ahead of any problematic activity that could be happening with these loans is key. We provide credit ratings at the time of origination, and then we have services that allow the financial institutions to continue to surveil these loans through the life of the loan. And really, that allows you to not go from performing to non-performing, but it gets you to performing to sub-performing. And at sub-performing, you'd rather be dealing with this and kind of turning that loan around versus having move into a non-performing status. And then now you've got trouble and issues, and you're bringing in special servicers. So I can't say enough, and I know from a regulatory standpoint that is a key provision that the regulators are looking at for cannabis lending.
Absolutely, Ted. Yeah, credit monitoring for commercial loans, regulators are all over that, and you know that that's on steroids when it comes to cannabis lending, and that's what CTrust will do. I think a lot of financial institutions often make the mistake of thinking we can do this ourselves, but it's actually more efficient, more cost effective sometimes to outsource this to a vendor like CTrust that can do this. It certainly minimizes your burden and reduces the amount of time you're going to be spending on these loans. So, yeah, surveillance monitoring, very, very important. And also, again, as Ted was saying, from a financial perspective, making sure that you see any issues before they become real problems. I think that's absolutely key.
Hey, Chris, I was thinking we should kind of maybe segue here to talk about how safer banking and then rescheduling is going to impact this industry going forward. So why don't I'll let you take a shot at safer banking. Well, I'll give my editorial first.
Go
Um,
for it.
I don't I'm a when the ABA came out this year in favor of safer banking, that's a huge industry endorsement, and I think it carries a lot of weight. I think the chance of safer banking passing in 2026 is about zero. I think that's a 2027 activity given the political cycle we're in, the world conflicts that are out there, and everything else that's involving the legislative process. But importantly, I think it's moving. So with my kind of like um, crystal ball on this year, maybe I'll throw it back to you.
Yeah, thanks, Ted. I have tried to predict Washington for so long now and have been very, very consistent in my predictions. Unfortunately, I've always been consistently wrong in my predictions on Washington. I don't have any insider feed on this, but Ted, as you said, I'm calling it Safe Banking 26 because there have been so many iterations of safer banking. I remember talking to my CEO years ago. This must have been 8 years ago when safe banking passed the House. And I was telling him that, if this passes, if this gets through Congress and gets signed, this is going to represent some risk reduction for our financial institution. And as everyone on this call knows, you price your loans according to risk as well as time. And if there's risk reduction, then in my view, there may be a reason for price reduction. Uh, so um, so I don't have any insider knowledge on safe banking past Ted. As you mentioned, there was a letter about 3 or 4 weeks ago from the ABA, a two-page letter strongly advocating for passage of this long overdue legislation. I will say this, however, and I've spoken to some other attorneys about this, and they agree with me that the main thing that the Safe Banking Act does is it provides a legal safe harbor for banks banking cannabis. I mentioned toward the beginning of this webinar, that small circle of legal risk, the aiding and abetting. There's a potential RICO violation, and also there's also the potential for a criminal prosecution under the BSA Act. Again, I view those risks as very, very minimal, given the very uh, uh, cogent public policy reasons for banks banking cannabis. So I myself and some other attorneys agree with me, don't think of the safe whether that whether or not safe banking 26 passes is that big a deal. I actually think a lot of financial institutions are using the delay in passage of this bill as an excuse not to really look at cannabis banking. My 2 cents worth, Ted.
All right. Well, so the banks have been operating under the Cole memo now for 10 years, 12
Exhibit
years.
Exhibit
Yeah,
A.
yeah, Cole memo, yes. So safer banking then, Chris, does replace the if and when passed, would replace the Cole memo and and layer in that level of comfort that banks would have that now this is a federally protected banking application, even though you're dealing in kind of a gray area where you have a dichotomy between state law and federal law as it relates to the illegality of cannabis.
So the thing about safe banking is it doesn't make cannabis legal. And so one of the regulators that's been deathly quiet during all of these years has been FinCEN.
Hmm.
Uh, mentioned the Cole memo and the FinCEN guidance that followed from that. I would anticipate, Ted, that with if safe banking passed, and we're going to talk about rescheduling in a minute. I think there's going to be much greater pressure on FinCEN to revise its guidance and to reduce some of the compliance burdens associated with cannabis banking. Um, and in fact, there are provisions in the Safe Banking Act itself which directs regulators to revisit the compliance burdens associated with cannabis banking.
So that's like a double win for the industry. If you have, some slight level of compliance relief that it obviously has a cost to it, and then on top of that, you have the ability to lend and make more of a net interest margin. That's a win-win for the banks in the industry.
Absolutely. Yeah. I think that if safe banking passes, we're going to talk about rescheduling. That is already moving through.
Hmm.
We'll talk about that in a minute. With both of these, moving forward potentially, I do think there's going to be some reduction, not only in compliance, but more importantly in compliance costs. So. But talking about those compliance burdens, for any folks who are already doing cannabis banking on the depository side, who are on this webinar right now, you've already ticked off. You're already managing those compliance risks, the BSA risks, the filing risks, and what CTrust does is it kind of takes care of the remainder of those risks when the additional remaining risks, which again are collateral risk and underwriting risk. There are legal risks, and again, Cogent can help with those. But those are kind of the three additional risks associated with cannabis lending. And one of the other big differences, in the cannabis banking landscape between now and in the years past is that you have third-party vendors who can manage this risk for you. And CTrust is one of those operators that can help.
And certainly us in conjunction with there's some great compliance software packages out there that many of the people that are taking deposits today use. And so between the data from the visibility of the cash flow into the bank and the deposits and the BSA work, and then us providing additional intelligence on top of KYC and KYCC, we really kind of start to tick all the boxes. But this industry can get really interesting too now that rescheduling has taken at least the medical part to Schedule 3, and that's changing the financial complexity of our of the potential borrowers and applicants in this industry. So, Chris, what are you seeing on Schedule 3, and what is Cogent's view of kind of how this may play out in the next few weeks here?
Yeah, great question. Yeah, we've mentioned rescheduling a few times already, and I'll just kind of go through, what's been going on with rescheduling. Back on December the 18th, President Trump announced with his executive order that directing the Department of Justice to proceed with rescheduling of cannabis, medical cannabis, as expeditiously as possible. Those were his words. And whatever one's thoughts about President Trump are, we have a very different administration whereby the influence is from the top down rather than from the bottom up with this administration. So, Trump has stated very unequivocally that he wants cannabis or marijuana to be rescheduled. So we all kind of held our breath, waited with bated breath for several months after that to see what would happen. And then, lo and behold, in late October, the Department of Justice uh, issued its order, which again took a lot of people, including law firms, by surprise by immediately rescheduling state licensed medical cannabis to Schedule 3. Again, this is a substance that's equivalent from a regulatory perspective to Tylenol coated with codeine. So big, big change there. That order also uh, mandated that there be an administrative hearing to determine whether or not adult use cannabis should also be rescheduled. So there was an administrative hearing process that started on June the 29th and went until July 15th. Anyone who was following this, it was kind of an odd proceeding. They took a very, very narrow view of who an interested party was. And they really only um, uh, accepted those folks who were against the rescheduling. Um,
Yeah, there
uh,
were a lot of people in the cannabis industry quite upset that the proponents didn't get a voice, but I think that was kind of the government playing a little bit of their hand.
that's exactly right. I think everyone was subsequently pleasantly surprised by the fact that, it was the government who took on the role of proponent, and they had some pretty strong fighting words during that hearing about the folks who were against rescheduling. They said, pretty unequivocal language that the interests that you are talking about right now are your own self-interests. They're not this interest, they're not in the public interest. And that's what this hearing is all about. So I think the proponents of rescheduling took heart in the fact that the government itself was kind of taking on the role of proponent for rescheduling. The latest that I've heard on that rescheduling hearing for adult use is that the administrative law judge has requested written closing arguments on or before August the 17th. And then there will be, and then there's no uh, a time, there's no a specified time frame for when the administrative law judge will issue his recommendation or and when the agencies will follow suit. So again, we're kind of in a waiting we're in a hold and wait uh, 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 place right now until we get that recommendation.
Well,
Yeah, go ahead.
yeah, well, certainly rescheduling has some very positive impacts. Even the rescheduling as it's done today on the medical side has very positive impacts for the cannabis industry. Obviously, the 280E relief, the IRS tax code 280E relief for the medical operators is a huge, improvement to their cash flows. I couldn't imagine running a business from the top line only and not having bottom line expenses. I've done it, and you become very creative in setting up these Byzantine organizational structures and operating structures to shield as much of the cost of goods sold away from the actual plant touching materials. Makes it very difficult for financial institutions to understand the kind of governance and the relationship between these entities. And I think we'll see some of that start to collapse. Certainly, the cash flows get better. I mean, look at what Glass House has recently done with their announcement that, hey, we're in the medical business and we're headed out after worldwide exports. There's compacts between states for interstate commerce starting to take place. So there's a lot of positive headwinds, but we've really got three outcomes in my mind that could be from rescheduling. Either it's totally descheduled, which would be the perfect outcome. Not 100% sure that's going to happen. Moving it to Schedule 3, it has some legal issues around it that I'm not equipped to talk about, but my business partner Bob Hoban talks a lot about on his podcast, and when he speaks to it, the conflict between the Schedule 3 for medical that has a no medical use, and then jamming the adult use on top of that. It has some complicating factors, or it could go to Schedule 2, which would again relieve that 280E expense and allow these companies to operate in a much more effective and efficient manner. So I think for any of the financial institutions thinking about this, there's already been a segment, and especially if you're a financial institution in Florida, Pennsylvania, or any of these big medical states, you have customers now that have different operating profiles and different cash flow profiles and have different credit worthiness. So the ability to kind of understand that and understand that risk on top of the collateral starts to make an attractive pool of candidates for lending.
Yeah, you're so right about pointing out 280E. That really is, I think, one of the biggest deals with the rescheduling. And, if anyone's looked at 280E of the tax code, it's like a two-line provision. And it's very straightforward. It basically says if you're Schedule 1 or Schedule 2, you can't make your business, you can't deduct your business expenses except for a couple of exceptions. So the rescheduling is going to certainly make for much healthier balance sheets on the part of cannabis operators. And again, from an underwriting perspective, that's going to make them much more attractive borrowers. So really, really important. And we'll wait and see on the adult use side.
Chris, do you have an opinion? Let's say this comes through and adult use is rescheduled to Schedule 3. Do you think we'll see still a plethora of lawsuits to try to you know kind of stall this and revisit it, and kind of how would that, in your mind at least, how would you think that would play out from a practical standpoint for bankers in this interim?
Yeah, so there have already been some lawsuits filed, which have to play out. And I I'm loath to make any kind of predictions, but I would imagine that this all might get settled. The rescheduling might get settled sometime in 2027. It is important to note that
Agreed.
yeah, it
I'm
is
I'm with
important.
you.
You are okay. That
Yeah.
gives me some reassurance. You know, the if we, harken back to the Biden administration when the rulemaking was started there, the the comments that were received, there were about 43,000 comments received on the rescheduling, and about 40,000 of those comments were for the rescheduling. And these are medical professionals. A lot of these folks know what they're talking about. So, the argument for rescheduling is extremely persuasive. The litigation that's going to be involved uh, surrounding the rescheduling order is going to relate to the procedural aspect of it, the rulemaking, whether or not the DOJ actually had authority to make medical state regulated medical cannabis uh, Schedule 3 right away.
Hmm.
It's going to be on those grounds. So wait and see on that.
Yeah. Well, certainly, and then if you think about it, we have this looming November 12th date for the intoxicating hemp industry. So let's add another level of complexity here. The cannabis industry fought long and hard against the intoxicating hemp industry. They saw it as a industry that did not have to play by the same rules that they played by, that probably had some packaging that was questionable, certainly distribution outlets where children were involved and not 21 plus, and some things that just, they felt that the playing field wasn't level. And here you have a plant now through science that you can derive intoxicating cannabinoids and have a similar effect both from the hemp side of the cannabis plant or the marijuana side of the cannabis plant. And now, as a banker, too, you've got some decisions to make on kind of if you are banking intoxicating hemp customers, what are you going to do with those? And this could be very interesting. I kind of have a feeling this thing's going to get punted down the road, though, in my mind, that some kind of legislation will be put in place to kind of kick this can down the road for a while. So some regulatory framework that this whole industry around one plant, there should be one framework, one plant should be put in place. Well, that's, again, that's a personal opinion being put forth, but I think practical minds in Washington, if there are any, would argue that one set of regulations would be the norm for here. But again, all of this has really positive impacts on overall cannabis banking and then overall cannabis lending. I think you'll see new entrants. I think you'll see expanded lending, and I think you'll see right now. I think we commissioned a report in the end of 2024, beginning of 25 by Bo Whitney, looking at the demand for cannabis financing the next 10 years, and at that point, his estimation was 27% of the license holders in the U.S. were profitable, um, and another 25-ish% were kind of break even. That whole dynamic's going to get flipped with the elimination or the reduction of 280E. So as a banker, what you may have perceived as a non-credit worthy commercial account in the past, it could be very much credit worthy given now the new cash flows. Um, but I do want to throw one cautionary flag up around 280E. There have been a lot of cannabis companies that have kicked that 280E tax burden down the road, and they're still carrying it on their balance sheets. And I don't believe the IRS is going to forgive back um, um, taxes. You may be able to make an offer in kind on that and walk away from some of that debt. But as a lender, I think understanding the past 280E exposure carried on their books is going to be very, very important. And certainly that's one of the areas that CTrust in our analysis looks at.
Yeah, thanks so much for that, Ted. And I just wanted to go back a little bit. We're, switching gears a little bit, talking about intoxicating hemp that you mentioned just a few moments ago. And I understand we don't have much time left. And my own personal view is that, cannabis banking now is well enough settled that getting into cannabis banking and or lending, that actually offers less risk right now, in my view, than there's a lot of uncertainty going on with this, as you mentioned, Ted, this pending intoxicating hemp ban that's coming up. I believe it's November the 12th. I actually, if for and the conundrum from a banking perspective, that's a lot of banks, because of the 2018 Farm Bill, they decided to bank hemp but not cannabis because the filings weren't required. It wasn't considered a federally illegal provision. But because of the loophole in that, we now have this intoxicating hemp industry. And what are banks going to do in the event that the loophole goes, if the hemp ban actually becomes effective on November the 12th? And I do have a question, if for any folks who are on this webinar who are banking hemp, I have developed a questionnaire that will assist you in determining the various risk levels of your hemp customers so that you're in a better place. You'll be better positioned no matter what happens come November the 12th. But again, the primary focus of this webinar has been on cannabis and how to mitigate the risks with cannabis lending. I think we're coming up to our time for questions and answers. So if folks want to um, do we, let's see, Rafa, do we have any questions? Okay, it looks like we've got six questions here. And Rafa, where can we find those? Are they in the Q&A? Yeah, let's just look here. Oh, here, yes, I see them. Okay, very good. Got it. Ted, are you looking at these too?
Yep, just got them opened.
Okay, good. Yeah, me too.
Um, What is let's maybe start with this is a very long first question. What is the new data on equity in cannabis? I think that's a great question, first off. Equity is creeping its way back into cannabis, but it is very selective equity coming back into cannabis. I think you see some of the private lenders who shall remain nameless, who have made loans in cannabis and then formed a large MSO and put some of those distressed assets into that MSO, really leveraging equity in their quest to build that MSO. I think that is the exception and not the norm. I still think that, especially for startups, equity is friends and family money is great, and as you get a track record, there's ability to take on debt. But I think because of so many people reached that flame and got burned in that 2018 to 2021 timeframe, I just don't think you're going to see a ton of equity come rushing off the sidelines.
Yeah, I would agree with that, Ted. Chantel, just getting back to your first question, that might be one that we take offline. If you want to contact either Ted or me, we can have a chat with you about that. Let's get on to the next one, the one from Mick. Do you want to take the one from Nicole? What is the new data on equity in
Yeah,
cannabis?
we just talked a little bit about that one.
Yeah, yeah.
Okay, then going to the mixed question. What's going to be the approach towards agencies that market cannabis that aren't physically touching cannabis?
I can talk about this, Ted, if you want.
Yeah, that'd be great.
So, this all gets into, the direct versus indirect, the ancillary versus the direct folks. And, again, there's very precious little guidance on how to treat indirect cannabis companies. Right now, the approach I took and the approach that I see with other banks, uh, getting into helping other cannabis folks is that, they do represent some enhanced risk from a banking perspective. And therefore, while they wouldn't require any kind of filing obligations, SAR filing obligations, they would certainly, I think there'd be an expectation on the part of regulators that those accounts be set up for some kind of enhanced monitoring. And, I would be particularly interested in knowing uh, whether or not there's any sudden increased revenue in the deposit accounts, which again could suggest, doesn't necessarily mean, but could suggest that they've gotten into the direct market. And what this means following rescheduling is a great question. I think rescheduling, again, it doesn't change the FinCEN guidance. It doesn't change um, I'm without any specific guidance, and there hasn't been any specific guidance on how to bank indirect cannabis operators. I would continue doing the same thing, that kind of enhanced monitoring. Even the cannabis, even if cannabis rescheduling makes its way through, even if safe banking makes its way through, these accounts are all still going to be higher risk accounts. Make no mistake about that. So they will be subject to enhanced monitoring. I hope that
Yeah.
answers the question.
And there's a kind of a follow-on question here. There was a question around regulations internationally going to be part of the language of the Safe or Safer Banking Act. We've haven't seen the full context of that law. I can't imagine that it's going to try to pick up on the EU GMP and all of the kind of pharma like activity that's happening internationally, the import export capabilities. I think there's enough to tackle actually within the domestic cannabis industry and the financial system to probably go after that first, would be my opinion, and then any kind of applicability between the regulatory environment and the banking environment in the U.S. and the international banking environment probably will iron out over time, would be my guess.
Yeah, Lena, yeah, good question. I've read both the House and the Senate versions of the bill, which are identical, and Ted is absolutely right. There's no reference whatsoever to international treaties or obligations in that. This is really going to be a domestic issue, given this state federal dichotomy with cannabis.
Chris, we have another question. It says, what would be a good framework for a newcomer to market using the rescheduling as a guide? And I guess I think the context of this question is the framework to enter the industry, I would believe.
Okay, and I'm
I,
assuming
I would I would
banking.
assume that, yeah, and
I
banking,
think
yeah.
that's right. Yeah. So a lot of people, when it comes to cannabis banking, they feel very overwhelmed about, how do we get this program started? And this is going to sound a little bit pitchy, but I would be able to kind of help fast track the program. I do think the timing is good for newcomers. One of the risks that I think is often overlooked by those people who are not in the market is the lost opportunity risk of banking cannabis. And so, in terms of a framework, you're going to want to present to and again, I would be more than happy to do this without obligation or charge, to present to your board or your senior management on cannabis banking, what the risks are, and then, kind of a 10-point program on getting the program started, with your getting your policies and procedures in place. Your risk assessment is a key document that your regulators are going to want to see. And then, structuring your BSA department and your lending department and making sure that those two departments are communicating well. So I think those are kind of some of the key points in terms of establishing a framework for. And your question, I've really been addressing the question about getting into cannabis banking. Uh, so, regarding rescheduling, as I said before, nothing's really changed because the FinCEN guidance hasn't changed yet, although we're still kind of waiting for that. We don't know if that's going to happen, But again, the FinCEN guidance is still your Bible when it comes to cannabis banking. And the risks that Ted and I have discussed and the ways to mitigate those risks for cannabis lending are still there, even with reschedule.
There's a couple questions around the equipment financing industry here that have popped up. Let me here's do equipment financing companies need the same guidance? Well, I think equipment financing companies obviously, continue to follow your UCC, guys. That's what I would tell you. Make sure that that you have a claim on that equipment. I think the the guidance I would give an equipment a current participant in equipment financing is that I think you'll see more financial institutions get into the equipment financing business. That's something they do in other industries. That's something they're very comfortable with. I know that my discussions in the secondary markets and with the some of the distribution channels and the potential fixed income buyers, there's a heavy appetite for equipment financing. That's something they can get their hands around. And it's attractive to the point that a lot of the cannabis equipment, while it doesn't have a great secondary remarkability, I guess is the word. There's always cents on the dollars if you get it back. But there is the fact that a lot of this equipment is very large and cumbersome, and you're not walking out with a giant extraction hood and or all of the HVAC components that are sitting on the roof of a cultivation facility. So there's some comfort there. I think what the cautionary tale about current equipment lenders is that I think you're going to see more competition and from traditional financial institutions which have done this for other asset classes.
Yeah, I would agree with all that, Ted. And Ted, you've already talked about, how to the valuations on the equipment and, that to be conservative with that, I think is is very, very good counsel.
Oh, there's a question that I think that what do you think there are key components that banks need to look at for ongoing monitoring with a cannabis loan? Obviously, you're going to want to continue to look at it's kind of an interesting industry if you think about it. It's one of the few industries in the world where you actually only rent your license and your ability to do business from the state until you do something across the state and they revoke your license. So, the ability to keep a track of the licensure and the ability to kind of service these markets. Obviously, precipitous dips in cash flows are key pieces. Seeing receivables starting to pile up on the balance sheet gets troublesome from a manufacturing and wholesale side, and certainly payables if there's all of a sudden not paying their bills. So what we look at a whole host and in fact, we just basically counsel our lending clients to refresh the credit rating that we do that goes in the original file, depending upon the score of that and an interval that makes sense to make sure that that loan keeps performing. If you have a very high scoring, if they land in our very good tranche, which is the highest scoring tranche, that's probably once a year to go ahead and refresh that. If you're in the good or fair tranche, those cycles are going to be quicker, either semi-annually or quarterly. And then I'm probably pretty sure that in our poor and very poor tranche that there's not going to be a lot of financial institutions extending credit to those folks, and they're going to be working on repairing credit to move up. So anyway, I think we're coming to the end of this, Chris. They put a slide up.
Yeah, we've got our guillotine here, and I understand that we haven't answered all of the questions in the chat, and I want to emphasize that both Ted and I are, available. Please, feel free to have a chat with us. Our details will be found if you yeah, look at those QR codes. Again, both Ted and I want to thank you very, very much for being part of this conversation. It is so vitally important that this conversation evolves. And please feel free to contact either one of us if you have any further questions and are interested in either getting into cannabis banking or cannabis lending. Ted, it's been great presenting with you as always.
And Chris, always a pleasure. And Cogent Law, thank you so much for hosting this. I really appreciate working with you guys on a daily basis with our banking clients. So once again, it was my pleasure. Thanks, Chris.
Yeah, thanks so much, Ted. Have a good day, everyone.